and welcome to this week's look at the major stories that had an impact in the market in the last few days. A little bit of a change of tack here. We're going to start over in the States today. What we're going to take a look at is the FTX crash, and that seems to be overshadowing inflation news due out on Thursday later today. Our CPI figure year on year will be published today, Thursday. Now, inflation year on year is expected to be 8%, which is actually down slightly from the previous 8.2%. And there has been talk in the markets in the last week or so that, are we seeing the peak of inflation at this point? Will interest rates be moved as much as we're expecting them to be? Well, obviously, we're going to have to wait and see. But the Fed's decision to correct the current market turmoil will depend on what these figures and these numbers are that come out. And of course, on top of this, we've also got the US midterm election results due. Little bit of a battle going on there, obviously, well publicised, but they will have an impact. What that impact is going to be, of course, is yet to be seen. However, the news agencies at the moment do seem to be focusing more on the FTX crypto exchange collapse and its potential impact on the whole financial system. Bitcoin, in fact, we've seen down below 18,000, which has always been a bit of a key level and is now going to be seen as an important resistance level. Binance, possibly the largest crypto exchange out there, were due to come to the rescue of FTX. There are some close links between both firms, or at least that's the way it appeared. However, after further due diligence, they've now pulled out, citing various different reasons, but clearly some concern there over the operational stability of FTX. What does this mean for the crypto markets in particular? Well, there has been talk of a crypto winter, and is that crypto winter finally coming? Certainly an area to keep your eyes on in the coming days and weeks, and I'm pretty sure it is going to have some sort of impact, particularly for those investors and traders that do hold some form of crypto holding themselves alongside their more traditional methods of investing. Okay, for our second video today, we're going to take a look at a story that may well contradict something we spoke about last week, which was an increase in oil prices, and the fact that a lot of commentators are now saying, is there a bearish reversal in the oil market starting? Now, the price of oil is affected currently by a few factors, many of which we've already touched upon before, but certainly looming large at the moment is the European embargo on Russian oil, due to come in on December the 5th. We've also got the US election. Now, both parties in the US have basically said they will fight this energy crisis, and we know the Biden administration has in fact released some of their oil reserves in the past weeks and months. There is also now fears of a new COVID outbreak in China. We're currently looking at the third successive day of losses for oil futures. We've been hearing this morning potentially Guangzhou, quite a large area in China, potentially going into another lockdown. On top of that, we've got US data on oil stocks indicated that inventories increased by 5.61 million barrels for the week ending the 4th of November. Now, these are all things that will obviously have an impact on the oil price. Lockdown obviously lowers demand, US stocks going up, potential for more releases to try and control that price. And on top of all of this, we had the Oman Minister of Energy stating that current price is not sustainable and believes that the price will retreat to around the $70 to $80 mark. Looking at charts, there's still some support there, but is that starting to wane? Now, the oil market is an incredibly topical market, and as we can see, we spoke last week about, is the price going up? And this week, we're now looking at a bearish trend. So keep your eyes open. Risk management techniques in markets, even like oil, are going to be very important in the coming weeks. Okay, now we're going to take a look at the FX markets and the story that's had a little bit of impact earlier in the week and potentially is going to roll further a little bit more. And that's the euro against the US dollar and the euro against the Japanese yen, aiming for more upsides. Earlier in the week, the euro did clear spot 9950 resistance levels against the US dollar. That was quite key. And there was a bullish trend line was forming, support near the 1.0040 mark on the hourly chart. Now, there's an awful lot of data, CPI, inflation rates to come out of the States. They're clearly going to have an impact on these markets. On top of that, after those figures come out, we're going to see a lot of the Fed officials speaking, and a lot of their speeches will undoubtedly have some form of impact on the dollar and thus euro against the dollar. So a market to keep your eye on, but certainly seems to be a little bit more momentum building behind that euro. In fact, euro against the Japanese yen started a strong increase earlier this week and settled well above the 146, the figure zone, and in fact is still trading above that now. So again, depending on what we hear from the Fed, depending on certain other factors obviously, but it's looking like there could be a little bit of strength in the euro that could rumble on for a little while longer. Again, obviously, risk management techniques, keep your eyes on the news. Lots and lots of news items will have an effect in the coming days. Okay, finally this week, and trying to ensure we cover a wide range of markets, we're going to pop back over to the States and we're going to look at tech stocks. Now, big tech stocks have become, relatively for them, very volatile over the last months, year or so. For a period of time, they were seen as a pretty stable area to invest your money in, but that seems to be changing. Now, lots of impacts, lots of things have happened, probably in the last 2-3 years, really, that have a direct impact. You know, US stocks have to use, big tech stocks, those firms have to use multiple currencies. Of course, they're based all over the world. Now, a strong dollar can be seen as good for US firms, but of course, if you're having to pay people more effectively in other areas, that's going to have a negative impact. This week, in fact, the last sort of 10 days or so, we're seeing a lot of talk about staff redundancies, often a bit of a marker for the health of a sector, of a particular industry. Obviously, Twitter ones have been well publicised. We know Elon Musk has not only sold significant amount of holdings in Tesla, many people think to help fund the purchase of Twitter, but he's got rid of an awful lot of people there, with potentially more to come. Mark Zuckerberg at Meta has just announced some major redundancies of their staffing levels. Amazon and Apple have both got hiring freezes on. And Lyft, the ride-sharing application over in the States, is laying off 13% of its workforce. If we look at some of the headline rates, we see Amazon down 40% year on year, Apple down 25%, and some serious fears there for Apple with the potential for new Chinese lockdowns. Obviously, we know, both demand, but more importantly, supply has had an impact with Chinese lockdowns on Apple before. So is there more to come on that? Other sectors have been hiring though, which seems to have helped cover up some of this sort of layoff of workforce in the last week or so. But nobody knows how long that will continue and whether these tech stocks will in fact need to lay off more people in the coming months. Currently, they seem to be in the background a little bit. Nasdaq performing reasonably well back half of this week. Rocky start to the week. But is that just because most of these layoffs haven't finished yet? The other sectors are covering those losses in terms of numbers. So what's going to happen when all of this really comes to fruition and hits? Is corporate performance still being taken at face value? I think we're going to see a change in the way people analyse and value these stocks in the coming weeks. Now they're becoming more volatile and the rosy, happy days of summer seem to be over. We wish you luck with your trading in the week ahead. Bye for now.